Hello everyone, it's John here again, and you guys did mention for me to go ahead and review the previous week's price action, so we're going to go ahead and do that as promised. Now, I did say I would record it today, and I did, but the video does have some audio issues. I'm not sure why that's going on. Actually been going on for some time now, ever since I started doing these lectures. But I am going to get a new mic, but I was able to configure some settings here to see if it will in fact behave how it should be. So yeah, without further ado, as promised. So first of all, let's go ahead and take a look at the news for the previous week here. I do believe it was CPI and PPI. So go ahead and look at that on Ford's Factory. So yeah, on Wednesday we do have CPI, and on Thursday we have PPI news. For Friday, we do have core retail sales at 8:30, but it is orange folder. And we have consumer sentiment at 10 a.m. And at 3 p.m., President Trump speaks. So whenever Trump speaks, that is a day to be very cautious. But from what I remember, the 8:30 core retail sales did not, in fact, really do much. As it would back in the day, it used to also be a red folder news. So yeah, let's get started here. We're gonna go ahead and look at the hourly chart here. And what I want you guys to notice here is the first thing we're gonna do is mark out the previous week high and the previous week's low. Okay, this is very important key levels here. I'm going to go ahead and mark them as well. Perfect. And what we're also going to be doing is measuring out the equilibrium between these ranges. Perfect. So I'll go ahead and label that as well and lock it. So what we're looking at here is for Monday. All right. What we're going to do is we're going to go ahead and this out till 16 o'clock, which is when the market closes. And we're going to go ahead and measure out our new week opening gap for this for Monday, August 10th. Okay? So I do have an indicator that marks it automatically right here. But we can go ahead and mark it ourselves as well. You get the closing price of Friday and you get the opening price of Sunday. But extend that, and that would be our new week opening gap for the current week, August 9th. So what we'll see here specifically is I want you guys to pay attention to the new week, not the new week, the previous week candle right here from Wednesday. What we're gonna do is we're gonna go ahead and measure out the opening price to the top of the candle. And what you'll see here is that it stops right before hitting the mean threshold. So when we see this, this is it shows that price is in fact very weak, very bearish. So what you want to see if you're looking for lower prices. Now, what you guys are going to see here as well is that we do have the midnight power of 3. Okay. So what I mean by this is that the midnight opening price is your daily opening price. I don't care what TradingView's opening price is. That is not accurate. The algorithm will refer to New York midnight price. If you are bearish, you will be looking to sell above the midnight opening price or at that level or right in advance of it. And that's the worst case scenario. Okay. So what you guys will see here is that we do have this bearish SIBI right here at 7 a.m. What happens, and we do also have a bullish SIBI here with a low in it. I know you guys see that, but I don't like that we closed through the low, so that's not ideal. So for me, it was more of a bearish day due to the fact that we did not hit the 50% of this order block. So we'll go down to the 1 minute here. And what you guys will notice here is that price does in fact consolidate here during the 9:30. We reach up into this gap that formed at 7 a.m. And when is the algorithm here ready? Well, take a look here. Get a shift of structure right here. Market makes a fair value gap right there. Gotta make that red and no extension there. And what you guys will see as well with this whole trade is that price also has this wick here from 1014. Notice here, turn off the 50% gap. Notice here that price perfectly hits the 50% of this wick right here. So price hits 50% right there off of the 1014 candle actually. And from there on, we start the sell program. We displace lower. It doesn't have to close below. Okay, guys. And what happens here is that we also get another displacement afterwards, right here. And this is the heaviest displacement that you can see. Now, I was looking to sell. I would go sell in this gap. And not just because of where the gap is, but what it formed inside of. So you see here, we engineer a low right here at 1135. So that would be your target. And what we see here is, remember the midnight PO3, all right? Want to see us manipulate above it, cause a reversal ideally, and then go lower. So if I go ahead, we're going to turn on the new week opening gap just to show you guys here. You have the new week opening gap from August 9th, which is this exact opening from this current week. Okay. Remember, it's right here. And you would also have, turn on the ranges. We look at the 243 range, either sell side resting right here. I know it's not a full model one, the price delivery model one, going all the way to range low, but this would be your target right there. This gap lines up with fractal EQ and along with the new week opening gap and IRD. They're both aligned in here. This is where you go short, as I taught you guys in the price delivery model right there. You guys can clearly see it there. Very, very clear sell model right here. Price goes, we create an order block rate. Instantly goes into it. Price then creates another order block right there. Then we have a SIBI here. Go into it, and then we displace lower. But yeah, just remember, guys, fractal EQ right there. All right, we're gonna go ahead and take a look at the next trading day, which will be Tuesday. Now, the thing with Tuesday, it is the day prior to CPI, so we're not looking to trade this day, but we're going to go ahead and review it for studying purposes only. Okay. Let me go ahead and turn this off as well. So what I want you guys to notice here is I'm gonna play it through right there. Perfect. And we'll stop it at 16. So what we can see here is that price does in fact go and use the same 7 o'clock SIBI right there. And what happens as well is we also do have this inversion fair value gap that formed at 15 o'clock, which is 3 p.m. Eastern Standard Time, New York. And we do have a low in it right here. Okay, this is going to be your sell side right there. Now, right here, what we can see is that I was looking to go long. Okay, we did long this right here. And if I also go down to the 5-minute, you'll see some very interesting. Well, we have a nested 5-minute gap right here as well. Okay, let's go back to the hourly. Take a look at this as well. You guys can see here that we make this gap at 7, hit it at 10, and then we hit it again at 7. Very, very clean. Here as well, 50 for the IFBG. Got the low at 20. So go back to the 1 minute. And what I want you guys to really see here is that price goes and does a 2022 model. Now, with the 2022 model, what we're going to focus on specifically is we're going to mark out the high to the low, and we're going to be looking at 50%. Okay. For 50%, we're going to be looking for the nearest swing point or inefficiency. What can you guys see here? We have an inefficiency right above 50% right here. Okay. So I'll go ahead and delete that. And when do we trust that we're in a buy program? Well, as soon as we get a shift with displacement. Take a look right here. You guys can see. Go ahead and create a shift of market structure right here. And then we have an order block right here. This is opening price of the order block. And we also create a fair value gap right there. Drawn out for you guys right there. Very, very clean. And you can see here, price goes and hits that and expands straight to the 50% of the 2022 model. I'll go ahead and turn on the PO3 ranges, and you guys can see here, we are in fact reacting off of the range 243 low. Where's the entry? Fractal EQ, yet again. Must be random, guys. That fractal EQ is constantly doing this. And I do want to point something out to you guys. This low, this sell side from the 1 hour is actually previous day low, guys. Very, very important to notate that. We're going to be using time-based liquidity, okay? We're switching it up. We're going to start showcasing even more algorithmic delivery. As I told you guys in the first episode, we're looking at gaps. Now I'm going to be showing you guys gaps and liquidities at specific times. And no, we're not using tapped up before anyone asks. But this right here would have been your trade right there. Now, what happens next? Well, we could use high right here to support price. Right there. Right here. Price goes and hits the gap. Alongside of that, if I turn this on, the new week opening gap, and we just turn off the ranges, you can see here, we actually do hit a new day opening gap as well. So this is also a key area to go ahead and take partials and close, because in fact, if we're trading a 2022 model, focus is to hit 50%. You go in here, have your stop at the low of the fair value gap candle or the first candle, you're making at least 95 handles right there. That's more than enough. That's more than enough to quit your job, guys. But yeah, that's definitely was the play there with the 2022 model. This was my favorite trade for CPI, pre-CPI day. But obviously we're not trading before CPI. So we're gonna go ahead and go back to the hourly chart here. And we're gonna play it out Wednesday, CPI day. Now, for CPI day, we do have a very, very clean trade, okay? But it's not what you guys would have been expecting, okay? So what we're gonna do is we're gonna go ahead and measure out the previous week high candle from Wednesday. And look at the 50% right here, 95.75. Okay, that is our mean threshold for the order block. Go ahead and write threshold 1 hour previous high block, bearish order block. Right. And what you notice as well is that we do take out the Monday high. Go back down to 1 minute. But I'm going to show you guys here is something very, very algorithmic, at least for the for the PM session, okay? So for the morning session, what you guys can clearly see here is that price goes and takes out the buy side, and then we have the series of up close candles. This is your bearish order block. Price comes right in here, and from there on, we do sell off, but it's just been high resistance throughout the whole morning session. So when the morning session copy how it is, we look for trades in the next session, which is going to be the afternoon session. Now, with the afternoon, what we're going to do is mark out our New York lunch raid, which is going to be between 12 o'clock in the afternoon, or noon, to 1:30 the afternoon, which is 13:30 New York local Eastern Standard Time, and mark out the high and the low of this session. Okay. So I'm going to go ahead and so what we're going to be doing here is I want you guys to know that the PM session starts at 1:30 in the afternoon. Okay? 1:30 is when the algorithm can start doing its macro for the afternoon. But a macro is going to be a short order of instructions that will create an event in price delivery. So your focus needs to be on the highs and the lows between 12 o'clock to 1:30. And yeah, the lunch session is a 90-minute window, by the way, guys. Didn't know. But yeah, there is an algorithm that controls price, and there is a macro that starts at 1:30. At 1:30, we're going to be using this as if it was midnight. We're going to be using this as a power of 3 for the PM session. Now, you guys don't know this, there's actually an the algorithm that starts the macro at 13:30. It actually sets the tone for the silver bullet between 14 o'clock to 15 o'clock. This is your silver bullet right here, this window, and it works because of the macro at 1:30 in the afternoon, guys. Starting to connect, isn't it? So what we can see here is price goes, and we have the 1:30 right here, the opening price. Price goes, raid high of the lunch session throughout our silver bullet. What you see here is that we get a heavy displacement to the downside from where? From this swing. Why is this the swing? Because as you guys can see here, this is the last used fair value gap throughout this whole run. And what happens is price goes into the fair value gap and goes straight up to the buy side liquidity. Now, this right here is the shift of structure. We even close below all of these lows right here, guys. Boom. We make a fair value gap right here, a SIBI. There. Now, go ahead and make that. And we guys can see it perfectly respects our SIBI and our last use fair value gap as an entry. And what happens afterward, guys? Take a look at this as well. This is your breaker right here. I'm gonna make the breaker purple. We'll put the 50% level as well. So whenever price does not hit 50%, that means that price is going to be weak. It's going to be faster moving towards its objective. Okay. As you'll see here, we go into it. We start displacing lower. Guys, we'll start seeing it very clear. Now, I'll go ahead and turn on the new week and new day opening gap. And you guys can see here that we actually have the new week opening gap of the current week right in advance of the lunch lows. So that is actually a good area to take a partial in. But just remember that's here, and we'll go ahead and take a look at the PO3 ranges. In this case, we're actually going to be using the 81 range. And what you guys will see here is we're actually doing what I will call the price delivery model number 2. So price delivery model number 2 is when we form a high at EQ, and it'll be vice versa for going to the market maker buy model. We form a high at EQ, and ideally looking for the next range to create some type of entry. If not, it's going to be a fractal EQ. Guys, there all these entries at fractal EQ just must be so random, right? So random, right? I'm pretty sure. I'm pretty sure they're all random, right? So, as we'll see here, we go to fractal EQ, and then we start supporting each range till we hit the sell side objective and the new week opening gap. Are you guys paying attention to what's going on here? It's a repeating phenomenon going on in these markets, guys. Your job is to see it happen live. Train your eye. You'll see it. But yeah. And just you guys, before you guys ask, I don't use quarterly cycles. I don't use 90-minute cycles. I know that this is a 90-minute window between 12 o'clock to 1:30, but that is not why we're using it. We're using it strictly because ICT did go ahead and mention it to us on one of his YouTube videos. You guys would go and investigate that video. You guys will understand why this plays out. And there's also going to be ICT videos in my Discord now. I've uploaded a few like basic core content month 4 for you guys to learn. I'll be posting some of them here and there, but I do want you guys to go ahead and focus and try to find these videos I'm talking about so you guys can see here. Okay. Everything that I'm showing you guys besides power of 3 ranges has all been taught by ICT. The 1:30 opening price for the PM, the midnight opening price, 50% of an order block being the mean threshold, the DE of a gap, showing heaviness by not hitting it. It's all there. It's all brought to you by ICT. I'm just showing it to you guys because I do use it in my trades and I want to explain how I trade here. So moving on, there was no other clean trade for me throughout CPI day. We'll go ahead and take a look at Thursday. Okay. Okay. Taking a look at Thursday, there's actually going to be 3 trade setups that I really liked on this day. Okay. First thing we're going to do is mark out the high of this hourly fair value gap. And I'll also go ahead and show you guys new week opening gap. You guys can see here we are being up from it, but there is clearly nothing here besides the price action. Okay. Go ahead and go down to a 1-minute chart. Throughout this whole 9:30 run higher, we are not taking any trades here. I don't care. This just wasn't part of my model. Okay. So what we see here is that price actually goes, and we're going to turn on the power of 3 ranges because we do require the power of 3 ranges for this short. It's completely based off the power of 3 logic. Okay. What you guys can see here is that price goes and hits equilibrium right here. Okay. And then we go above it to the next range above it, which is going to be a fractal range, which is going to be the range 27 because we are using the 81 range right here. Okay. What you guys will see here is price goes, hit it, and we start displacing to the downside. Now, where is the first shift of structure? Right there. You guys can clearly see here, we make a fair value gap right here. Price goes lower right there. Okay, this is our sign right there. And what you guys will see here is price then goes and creates another here. In this case, we're going to be using the full candle right there because it does have a long wick. Price just has time distortion in here. We finally create a gap right here. Price sends it lower, breaking below this whole entire consolidation with a fair value gap right there. Where is this fair value gap at? Well, fractal EQ, of course, as I've mentioned again. See it bad right there, right in advance of it. So it is perfectly aligned there. It's well, not perfectly, but like I told you guys in the video, it's going to sometimes be a little bit off. That's totally fine. What happens next? Price creates another order block right here. We immediately tap into it. Right here. Tap into right there. We keep running away and we finally enter the 1 hour FVG high. Price then comes back up and we completely displace lower. Take a look here. If we use the whole entire candle of this order block, price closes above the mean threshold. We fail to hit the next quadrant and we displace lower. Take a look at that. There, lower hit lower end of the gap right here. Well, lower end, like lower end of this current price actually. Perfect. So this whole trade would have been based off PO3 ranges alone. And this is the price delivery model number 2. I know I haven't taught it yet, but this is sort of how it's based, okay? So for the next trade, which I actually did take this trade. It's actually a very nice market maker buy model. It's actually one of my favorites. Price goes and hits the range low, and we go a little bit lower, which it's allowed to go as low as the fractal range below. And what do you have here? We have a very clear shift of structure. Okay. And we have a gap right there in a line with it. You guys can clearly see here that we do in fact hit the high of the shift of structure. I'll go ahead and put it right there. Boom. That is our order block fill right there. What happens afterwards? We start buying up. Take a look at this. Go and take out this high, IEQ. The bodies are perfectly respecting the high. We have another fair value gap right here. And we just keep expanding away. What is a high that we could target in this case? Well, so you guys are going to look for a target at range high. You could target this right in advance of it, or the high above it, or the high at the fractal range. Completely up to you. Price does end up going all the way back up and taking out this high right here. But I did trade this. I haven't posted anything about it, but I'm just letting you guys know I did trade it. I rode it up to around here, and then I got stopped out in profit. But this trade was actually very, very clean. But I'm gonna go ahead and look at the PM session. Okay. So, well, before we look at the PM session, I want you guys, okay, this high right here at 1035 actually going to be the AM session high. So, you guys don't know this, but ICT talks about AM session ranges is going to be from 9:30 in the morning to 12 o'clock in the afternoon. Why is this high so important? Because it's the high of the AM session. I know that people use other things for time cycles and stuff, that is not accurate. AM session is between 9:30 to 12 o'clock. I don't care. That's complete bullshit. Anyone telling you otherwise, okay, guys? Don't pay attention to them telling you go and watch a video of ICT on time, and you will see him repeating the same exact stuff I'm telling you. Matter of fact, I have the videos ready to prove it all. Okay? But moving forward, looking here at the PM session. Remember what I told you guys. We're looking at the 130. This is the macro. This 130 is a macro that sets up the PM session. Silver bullet. Remember, guys, this is going to set us up for 14 to 15. But this case, actually take it out on the final hour of trading. Something else and on its own. Now, I go ahead and we're going to actually put it at 16.15. ICT has taught us as well. We are allowed to have the 15 minutes afterwards. Price goes and takes out the AM session range high right there. Then what happens? We have a clear displacement to the downside right here. This is our signal. Gonna go ahead and mark out the last used fair value gap. Perfectly hit to the tick. To the tick. There is nothing more accurate than that. Go on your charts. Show me that I'm wrong. Look at the price of the 1459 high, 30,246, and look at the high of the 1521 candle. 30,246, guys. Algorithm is showing its hand, guys. Don't take my word for it. Test it out. Look how we respect the body of the last used gap as well right here. You guys tell me what's going on here. It's algorithmic right here. Okay, guys? So, with this whole run higher, we're actually going to mark out the low right here. So, this low is actually going to be this bullet section there. Current PM session. So, what happens is price goes, we take out that high, we've run it by like 21 ticks, 5.25 handles, and from there we get our sell model. What you notice here is price goes ahead and we displace another time right here, create another fair value gap right there. You can even mark it with the volume imbalance, not a problem. Mark it here. If this one has it too, this could be a suspension block as well. Price goes, and then we hit the opening price again. There, hit another open price right here of some up close candles. We create a SIBI right here. Oh, right there. And price just goes and delivers us to our objective. Boom, right there. This is another algorithmic trade, guys. Tell me otherwise. Someone come and tell me otherwise. We'll get proved wrong every single time, guys. This is how the market's book price, guys. Now, actually, before I delete everything, let's turn on the PO3 ranges. What we're gonna do is I'm actually gonna go ahead and show you guys. We were using a So this is what we would consider a reset model. So a reset model, which you guys do, I have a video on the reset model, but like a trade I took live. But you guys can see with the reset model, what we like to do is we like to hit equilibrium or the range above it. Like I said, there's a threshold for price distortion, and we want to see it come back down to range X. This case, since the sell side was resting a little bit below it, that is totally fine too. But you could have just targeted this imbalance right here, and that would have been a very, very clean trade. However, the liquidity lies right here. You guys can see here we have an entry right at equilibrium with the shift structure. And then we have the fractal EQ entry right there. Gap, enter right here. And then it goes down to low right there. 1424 low. There is no new week opening gap, new day opening gap. There is nothing here for us to use. All right. Strictly from the AM session raid right there. Very, very clear. Okay, guys. Very, very clear. If we went lower, could have gone as low as the lunch lows, which this case would be this low since 12 o'clock does not have a swing point right there. It would be right here. And we also did take out the lunch high right there. But algorithm reference AM session high right there. And this low for its objective. Overall, very clean Thursday. You had 3 clean trades. You had a sell model, a buy model, and another sell model here. Probably my favorite trading day of the week was on PPI for this past week. Now, I'm going to go ahead and head to the Friday price action. I'm actually going to go ahead and remove this threshold right there, hide everything here, and play out price. So 1 till 16. So we're actually going to focus on something that some of you guys might not even know about. This is something that ICT taught us back in 2023. Okay. So the PM session is from 1:30 to 16 o'clock. All right, guys. Now we're going to go to the 15 time frame. I want you guys to take a look at something. If I'm telling you that the PM session, 13 o'clock to 16 o'clock, the high going to be right here at 15. Buy side. The low is right here at 16 o'clock. Okay. Now I know you guys are saying, hey, John, we did take it up. You guys are not seeing it yet. Have to go and use RTH hours. You guys will see here is a very, very clean market maker. Go ahead and on prices. Okay. And let me go ahead and also put it back to electronic trading hours. So basically what RTH will do is it's going ahead and cutting. That's what it's doing. It's cutting all of the noise from the overnight session. Okay. So let's go back to the hourly real quick. I want you guys to see. Okay. Because sometimes this indicator with the new week opening gap doesn't mark some of them because of the low data. But you guys can see here, we do have the high of a new week opening gap from July 12th right here. And it's very important that have this level because right below previous week high. Okay. And we also will have this low right here, as it is a low inside of a fair value gap. So it's very nice to see what would happen right here. Moving down back to the 1 minute. It doesn't show us anything you're going. Okay. For the new week opening gap, it's completely gone right here. But it's still there. What we'll notice here is price goes and we take out the high right after regular trading hours start up at 9:30. We go and we take out the high. I want you guys to go on your chart and mark out the high of the 948 candle. Notice that price doesn't hit the 50% of it. What we're doing now is we're waiting for a very clear displacement to the downside. Now, for me, that displacement would be this low right here. So we have the 1011 as a displacement right there. And what you guys will see here is we actually create a SIBI right here. Now, this SIBI is called IOFED, Institutional Order Flow Entry Drill. And what that means is that price will either perfectly tap into the SIBI, or like, let's say the gap, or go in it by a point tick. So look at the low of the gap is 30,228.25. Look at this candle right here, 30,228.50. That is one tick right there, or right there, 0.25. Price goes into it, IOFED right there. Price displaces very heavily. We close below this low specifically. What you guys will notice is there is a fair value gap right here. Price hits it. And then what happens is we go and hit the PM session low right there. Next, what happens? We continue going lower and we take out the previous low inside of that hourly fair value gap right here. And then we hit the previous week high and we also hit the new week gap. Now, guys, notice here, price goes, we make an order block right there. We hit that opening price, drop around in there, and then price continues going lower. You see another order block right there with paired up with a SIBI there. Create another order block right there. Hits the opening price. Look how the candles stop right there. The body. And we make another gap right here. Boom. You can even use this low there. Then we have right here as well. You have another order block there. Price just keeps going lower and lower. And you finally get all your objectives right. Overall, a very, very clear day. If I go to the PO3 ranges, 243, you guys can clearly see here that we are attempting to do a model 2. Model 2 being one of the things is EQ to, yeah, guys, this was overall the day right there. Very, very clean price. Very clean. But hey guys, I hope you guys really enjoyed this. If you guys have any questions, let me know. This is my second time recording this, so I'm pretty drained off of this, but I'm doing it just for you guys, just because there was an issue with the audio. But yeah, if you guys have questions, let me know on Discord. Take care and be safe, guys.